One time frame is never enough to understand what a stock is doing. Looking at a 1-minute chart without checking the daily is like reading one sentence of a book and thinking you understand the whole story. Today, we cover how to read a stock chart properly, time frames and moving averages, the tools that show you the full picture.
A time frame is the time period each candle on a chart represents. A 1-minute chart shows each candle as 1 minute of price action. A daily chart shows each candle as one full trading day. Time frames range from 1 minute all the way to weekly. Each one tells you a different part of the story. 1 minute to 30 minute, useful for day trading decisions. Daily chart, useful for swing trading and short-term investments. Daily and weekly chart, useful for longer-term investment decisions. The most important rule, always zoom out first. Start with a daily or weekly chart to understand the big picture. Then zoom into shorter time frames to find your entry. Looking at only a 1-minute chart is like looking at one piece of a puzzle and calling it the whole picture.
Here is a real example using SOFI technologies. Looking at the 1-minute chart, it tells you almost nothing. The price action is choppy and unclear. If you only looked here, you would have no idea what this stock is doing or where it might go next. Now look at the daily chart. Completely different story. The daily chart shows clearly that SOFI needs time to recover. The trend is still working through a correction. The daily chart says, wait. Do not rush in. Let it prove itself first. Same stock. Same time. Two completely different reads depending on which time frame you look at. This is exactly why checking multiple time frames before every trade is non-negotiable.
Now let us talk about moving averages, one of the most powerful tools on any chart. A moving average is a line on the chart that shows the average price of a stock over a set number of periods. It smooths out the choppy price action and shows you the underlying trend. There are two main types. A short-term moving average reacts quickly to price changes and shows recent momentum. A long-term moving average reacts slowly and shows the bigger picture trend. The basic read is simple. When price is above the moving average, that is generally bullish. Bulls are in control. When price is below the moving average, that is generally bearish. Bears are in control. Different traders use different moving average settings. There is no single right answer. What matters is understanding what the relationship between price and the moving average is telling you.
If this free education is helping, hit like, share, and subscribe right now. Follow Alpha Breakout Lab for free stock alerts every week.
Here's how to read moving average signals practically. When a short-term moving average crosses above a long-term moving average, that is a bullish signal. Short-term momentum is turning positive. Especially powerful when price is also above the long-term moving average. When a short-term moving average crosses below a long-term moving average, that is a bearish signal. Short-term momentum is turning negative. A potential sell signal worth watching. When both moving averages are rising and price is above all of them, that suggests real momentum and a possible sustained run. This is the setup most traders want to see. When both moving averages are below the long-term average, be very cautious. The long-term trend is down. Any bounce is likely short-lived even on good news. One honest truth, moving averages are lagging indicators. They confirm what has already happened, not what will happen next. Always combine them with volume and support and resistance levels for the complete picture.
Here is the simple process for reading any stock chart properly. Start with the daily or weekly chart to understand the big picture trend. Check where price is relative to the moving averages. Then zoom into shorter time frames to find your specific entry point. Never skip the big picture step. The 1-minute chart is useful for timing, not for understanding what a stock is actually doing. Use time frames to find the trend. Use moving averages to confirm it. Use volume from part 2 to validate it. Use support and resistance from part 1 to time it. Together, these tools give you the complete picture that most beginners never see.
That is part 3 of technical analysis for beginners. Time frames and moving averages, two tools that together show you the full story of any stock. Part 4 drops next week, putting it all together. We combine everything from parts 1 through 3 into one complete framework. Like this video if it helped. Subscribe so you do not miss part 4. Follow Alpha Breakout Lab for free stock alerts every week. Builders do not sleep until the dream is real.